Congratulations. You've been named Best CEO in Asia on Friday by Corporate Governance Asia. Let's talk a little bit about your business because I'm having a hard time understanding your numbers since you changed your reporting system a little bit. So break it down for us first.
And so when you compare it to the same time period as the year before, we had very, very solid top-line growth. We're up about 12% on top-line growth. And so our business is about a $3.9 billion business today at wholesale. Our net profit was up close to 90%. And our core operating profit was up about 30%.
What about your operating costs? They were also up about 15%, if I'm not mistaken. Why was that?
I mean, we're a growth company. And to be honest, it's in line with what our expectations are because our top line grew at about 12%. But when you look at our margins, much higher. We added almost 200 basis points to our margin. And so it's really in line with our business because a lot of the overhead that we added on is for the next 3-year plan. And so which we announced yesterday at our analyst briefing. And so it's a very solid, I think, next 3 years ahead of us.
We try to map out your growth in segments. If you take a look at this chart on the Bloomberg, number 65, you can see that some of that growth coming from China seems to have slowed a little bit. The U.S. is fairly constant, but we have seen a little bit of a decline in the past. That's the line in white. Tell us a little bit about how you would break down your performance across the world, and also when you factor in the fact that retail hasn't really been doing great in the U.S.
Yeah. So the first thing is our U.S. sales were quite strong. And so we're up quite a lot over this last period of time. And if you ask me what region is the strongest, it's U.S. Now, when you talk about the U.S., I will say it's doom and gloom because store closures. But you have to remember, we're a wholesaler.
Right.
And we're selling to, the beauty of global brands, we're selling to every distribution level. So we're selling not only to department stores, but we're selling to clubs, we're selling to discounters, and Amazon and pure play online retailers. And so when you look at it, we've been focused because of multi-tier distribution. We're going where the growth is, and we have a quite a big portfolio of brands that are very strong. And they were able to fill in sort of the mosaic of what's going on in the whole growth in the U.S. And so overall, you look at the sales since '92 to now, retail sales, it's been pretty constant. It's growing about 4% compound annual growth. It's just a question of where it's growing.
So where is it, though, Bruce? Where is it growing exactly?
Well, you know, if you talk about the off-price, the clubs, people like Costco, off-price like TJ Maxx, it's growing. Amazon's growing.
But this is why we don't see any inflation. Everyone's getting cheaper, right? They're all getting discounted products.
Yeah, I mean that's sort of the future right now. It'll level off. When you look at sort of what's going on in the market today, value is very, very important, and I think it'll continue to be very important. And a lot of it's driven by the online. The ability to shop and find out what's the best prices.
Right.
But the truth is, the online have a really unfair advantage because generally they're selling below their cost. If you take into account shipping, you take into account returns, it's generally not a profitable business, but they're getting this huge market share. And I think the positive thing what's going on in the market is being transformed. There's too many stores. There's now a future where online and offline both will be important.
Right.
And when you look at sort of the future of retailing, it'll be very much driven by people able to buy in the store or try on in the store, and then maybe order it online, and then if they want to return it, bring it back to the store. Yes.
Bruce, just really quickly, though, just to change tacks from talking about the consumer, though, I want to talk about you as the CEO of this major global company. You know, how do you feel about, like, are you confident? Do you feel good? Are you out there looking for other companies to acquire? Or do you feel like things are too uncertain that you've got to sort of stay close?
You know, we're kind of a paradox because I think a lot of CEOs right now are nervous. You have all kinds of issues with the transformation in the retail market, as well as what new policies will come from the Trump government. But what we've seen is we're sort of in a very strong position because of our scale and because of our model. The last 3 years since we went public in Hong Kong, that's what we focused on. And whether we were smart or lucky, I don't know, we're at a good time right now. And so the one thing I can say is that we talked last week, we announced that we may be taking over BCBG. And we have a lot of opportunities like that coming to us where a brand is great, but it has perhaps too big an overhead, too many stores. And because of our scale, we're able to bring it in and redistribute it to a multi-level of retail stores, as well as lower the overhead dramatically to make a good brand into a great business. And so when you ask me how I feel, this is probably the most positive I felt in a long time. And it's because of our business.